This is RJ Banks coming today from Banks Credit Chat, discussing 4 areas to pay attention to when you're applying for your first home or applying for a home in general. The first one is to make sure your current residence matches your utility bills and all of your bank statements. People tend to forget about this little incidental step, but everything has to show a pattern of consistency, reliability, and dependability. And making sure that your current residence matches your utility bills and your bank statements it goes a long way. And especially as the economic climate continues to change and lenders become much more strict in paying attention to more details, having that consistent pattern showing that your residence matches your utility bills and your bank statements is extremely important. Number 2, along the same lines, is that you shouldn't have multiple addresses if you're applying for a first-time home. Multiple addresses doesn't show stability. So try to make sure that you can keep your residence at one place. It goes without saying, and it seems very simple and common sense, but the devil's in the details, and sense is not common. So be sure that you try to limit to one address and stay there consistently. It just shows a pattern of reliability, dependability, and consistency, and that's what lenders want to see. Third, it goes without saying, try to limit your applying for mortgages to just one lender. Multiple mortgages are frowned upon, and if you apply for different mortgages and from different lenders, it just doesn't look well. It shows a sense of desperation. So limit your applications to one lender, seeing all the different things that they need, and that one lender doesn't seem to work with you, then potentially go to 2. But after that, there may be a situation in your credit history or your employment history that you're just not at a time to purchase the home. So applying for multiple lenders is kind of frowned upon, and it's well known, and it's just not a good thing to do. Okay. Fourth, and this is needs to be said, they're looking at your whole credit history. So if you have patterns of not paying things in the past, and you can show that you want a track to you've corrected those issues, it's a good thing. Making sure that debt is paid down as much as possible. You're trying to establish a pattern to show that, hey, I'm credit worthy, and if I've had any challenges in the past, I've corrected them, and I show a level of consistency that I've taken care of all my debt obligations. And this goes for the fifth aspect, and it's to not apply for any new credit and to pay down any other debt obligations again. You don't want to show any pattern of that you're relying on credit to live on. It's just frowned upon again. So keep these different areas in mind, especially when you're applying for your first time as a first-time home buyer. Number 1, make sure that your current residence matches your utility bills and your bank statements, and try to match with every bill that comes into the house, but specifically your utility bills and your bank statements. Number 2, having multiple residences is not a good thing. You want to keep your residence down to 1 or 2. Decide a pattern of consistency, reliability. So having multiple addresses, it's not a good thing. Try to stick it to that one address. 3, applying for multiple lenders, it's frowned upon. Stay to 1 or preferably 1, at the most 2. Okay. 4 from 5 is kind of it's not actually 3 in that case, but 4 is to make sure that you're looking at your past history of how you handled debt. They're looking at the whole financial picture, and how you handled that in the past and the present is extremely important, and trying to show that consistent pattern that if you had any challenges in the past, that you corrected them and you're on the path of consistency, paying your bills on time, keeping the credit cards under limit, and you're showing a good pattern of credit history. And this goes for number 5, and that's to not apply for any new credit and pay down your debt obligations. Kind of all these 2 are kind of combined together, but I've separated them because they can be looked at as one entity in itself. So again, paying down those credit obligations and not applying for new credit, it goes a long way, because you want to show that you're not using credit to live on. And that goes especially in the day and age where housing and the criteria for lenders is becoming much more stricter, especially for first-time home buyers. If this video has been any value to you, please subscribe, leave some comments. And to my next video for Banks Credit Chat, I'm out.